The politicians and bankers are telling us that this latest bank rescue is not a bailout. What it is a new special purpose vehicle using the Fed's discount window as a bailout. On Sunday night, a joint statement was issued by the FDIC, the Federal Reserve, and the Department of Treasury that all deposits at Silicon Valley Bank and Signature Bank would be guaranteed. The politicians and bankers alike were very quick to point out that no taxpayer money would be used to fund this bailout, and that this is only being done to protect depositors. You know, the little guys. But nothing could be further from the truth. While it's true that no taxpayer money will be flowing directly from the U.S. Treasury to these banks, taxpayers and non-taxpayers alike will absolutely be footing the bill for this bailout of venture capitalists in the tech industry. Despite the fact that the Dodd-Frank Act was supposed to make taxpayer-funded bailouts and socialized losses from bank failures illegal following the GFC, the government and the banks have gone and done exactly the same thing. They're just calling it something different, and of course, they're telling us it's for our own good. And just like every other financial crisis before this one, the wealthy ruling class are enriching themselves at the expense of the poor and what's left of the middle class, and they're doing it using the hidden tax of inflation. Now, before we get into the details of how this non-taxpayer funded bailout is totally a taxpayer funded bailout, first I want to tell you about the sponsor of today's video, Patriot Gold Group. Folks, as we speak, people all over the world are clamoring to get their hands on physical gold and silver. As of the making of this video, in just the few hours since this bailout was announced, the price of silver is up over 7%. And that should come as no surprise because the last time we saw a system-wide contagion in the financial sector was in 2008 in the global financial crisis. And in the aftermath of the GFC, the price of gold rallied from $800 an ounce to over $1,600 an ounce in the 2 years following the crisis. Fact is, physical gold is the single safest financial asset you can possibly own. It has no counterparty risk. There's no bank that can fail, and there's no bond issuer that can default. And that's why precious metals are rallying right now in this flight to safety. As banks are failing and the government money printers are already starting to spin up again, ownership of precious metals is the single safest way to both unbank yourself and at the same time preserve your wealth from the eroding effects of the Federal Reserve's money printer. Patriot Gold Group is a Consumer Affairs top-rated gold IRA dealer for 6 years in a row, so call 888-988-5401 or go to nsfgold.com, that's Nobody Special Finance, gold.com, and get your free investor guide, and of course be sure to tell them nobody sent you. So let's talk about the lie that's being told to us right now that this is not a taxpayer-funded bailout of the banks. Under the plan announced Sunday night, the Federal Reserve is creating a fancy new word salad called the Bank Term Funding Program, or BTFP. Oh good, another financial crisis acronym. The BTFP allows banks to borrow much-needed cash against their bonds, using them as collateral instead of being forced to sell them. Sounds innocent enough, right? But of course, the devil is in the details. You see, the Fed isn't just letting the banks borrow against their bonds using fair market value. Instead, the central bank is allowing the banks to borrow par value against their bonds. Now, that is a very important detail because the fair market value is what you can actually go and sell that bond for right now if you needed the money. The par value of a bond is basically its face value. It's the original amount that was borrowed. The problem is, in a rising interest rate environment, a bond's fair market value is below its par value. Remember, bond yields and bond prices are inversely correlated, so as interest rates rise, the fair market value of a bond drops. And in the case of these bonds, the fair market value drops well below their par value. So what the Fed is doing right now is they're letting these banks borrow money using those bonds as collateral, but they're letting the banks borrow more money than the bonds are worth. Because taking out new debt and borrowing more than the collateral is actually worth could never cause problems, right? So if I'm a bank and my customer deposited $100 into their account, they've made a $100 loan to me. I take that $100 and I turn around and I borrow a bond. The par value of that bond is $100. The problem is Jerome Powell and the Fed go and hike up interest rates in 2022. Now the par value of my bond is $100, but the fair market value is only $90. Now I've got a problem because my customer wants to withdraw his $100. If I take my bond and I go sell it in the open market, I've only got $90 to give him. My bank just failed. But now, under this new BTFP, I can go to the Fed's discount window with my bond that's only worth $90 and I can borrow $100 to meet the withdrawals. Sounds great, right?
Nope.
Now a bank can go into the open market and buy a bond and then immediately go to the Fed discount window and borrow more money than that bond is actually worth and use that money to go buy something else. So predictably, the value of bonds is rising right now. The Fed is inflating the value of those assets. But it gets worse. Remember, when new debt is issued, and that's what this BTFP is, it's new debt. When new debt is issued, money is created. In other words, the Federal Reserve is further inflating the asset bubble using printed money. Because that worked out so well the last time they did it. The Federal Reserve is fighting the problem of this bank run by making the inflation problem worse. And as we saw all throughout 2022, inflation disproportionately hurts the poor. The poor don't own any of the assets that are inflated in value, but the poor do have to pay for things like food, energy, and rent that all get more expensive under inflation. So what's the net result? The tech companies get all their money back, so the uber wealthy venture capitalists that gave it to them in the first place, they lose nothing. The asset bubble inflates further. The wealthy get even wealthier because they own the assets. The inflation problem gets worse and the poor get poorer. And that's why it is a bold-faced lie that this is not a taxpayer-funded bailout. Anyone with a single dollar to their name is footing the bill for this bailout of venture capitalists in Silicon Valley. And you better believe that includes the taxpayers. Once again, the ruling class has privatized the gains for themselves but socialized the losses with us. They're doing exactly what they did after the GFC. They're just calling it something different this time. And as always, they're telling us you're welcome. Thanks again to Patriot Gold Group for the sponsorship of this video. And until next time, live small and dream big.